I believe we're all aware of the longer intermediate term technicals, so we just move to trade management. The most important to focus on are the current motive that we are looking at. This is today's 45 minutes. We are looking at a correction that has finished on this motive wave, a 1 and a 2, 3, 4 and a 5. The market did an A, did a B, did a C. We're bouncing out with the neckline. We retract lower. We're going to get a shoulder level. Move higher inside of the ending diagonal. This ending diagonal on that 45-minute chart is what you see on this 45-minute chart. There's high degree A, high degree B. We've seen an A. We've had a B all the way up to that point. This could be a 3. We'll get a 4A, 4B, and 4C. And that 1, 2, 3, 4, 5 is what you have been seeing here. Continuation 1, 2, 3, 4, 5. Now retracted. Now bouncing. This is the bounce we're taking in today. This is the bounce we're buying into today. This is the bounce out of a level 1. All right. And let's take it to 15 minutes. This is today's 15 minutes. Now more even defined. We have a 1, 2. We have a 3, 4. 1, 2, 3, 4, 5. And an A, B, and a C. Bounce is valid. What will retract that way we're out today? 150 right now, 150.20. I believe we just did a leg 1. We're going to do a leg 2. Best entry is 149.80. We're going to have a hedge below level 2, below the head, right? Take it where? Take it to resistance 2, of course, on the 4 hours. Take today's for this week's 4 hours, or 152, which is really shoulder level on the 4 hours. All right, let's take this live. We just need to focus on that 15-minute. You find that we have already bounced. We are at 150.20. We're going to get these red arrows to the downside. We buy the shoulders, if you wish. And we're going to have a hedge below level 1, that high degree level 1. We take it to resistance tool on the 45-minute on the 1-hour chart this week. PMIs should drive this issue higher. If they're good, of course. Well, probably they will be. All right, so this took off, and that was expected because, of course, sterling yen also took off. And we're seeing the same 15-minute that we were seeing on our own analysis. Take this to 5. I believe this neckline is working now. We saw the same neckline on the sterling yen. You have an indentation here. It's just a 5-minute, but it's correct even on such a very small frame. Let's take it to see the supporting momentum on the 30. And you get to see we have some kind of a trigger, or in the making, of course. If you have positive momentum on the 15, positive momentum on the 5, this is in the making, meaning it will hold. We're just looking at the end. You have, of course, trigger on the 45. Trigger on the maybe about 1 hour, maybe 2 hours. Everybody now gets the idea. 2 hours, of course, we're not really sure. We'll be interested in the daily. Check 4 first. And we can tell we're getting some kind of a tweezer formation. Very close to the tweezer formation. And the daily candle structure is important. Tweezer formation. So of course, if you see a lot of the same number of candles, yellow, blue like red, you're seeing a tweezer formation on the 4 hours, must show as a tweezer formation on the daily. We have a very good, at least we have a good chance of an excellent trigger to take, and looks like we're going to get dollar strength this week, and maybe good risk appetite, even though we are not seeing this on the Tech 100. All right, let's take it back to entry. The 15 minutes becomes now very easy to take the entry. This is a trigger. At least it's a trigger on the 5 minutes. Let's take it to 5. We believe it should continue. Market is a buy, a 150.23. Everybody would, even I was going to just saying that this is going to be a retraction back to 149.80 before you can do the long. But that's what the market wants us to think. The thing is, the reality is, this is an entry long immediately. There's a breakout, so that everybody will miss on it. This is an internal 1 and a 2 breaking out into a 3 because of this indentation and all the relevant triggers that we've been looking at. And this is not a double inverted head and shoulder. This is now a wedge. Of course, you can all see a wedge. If we join this line together with the boundary, we have a wedge. Breakout of wedge. So the market is along and the hedge is just below level 2. That's it. Take this here. This is long. And we defend at 149.70 below level 2. Entry is 150.25. Defend or hedge is 149.70. We can take this to 149.25 if you want to set and forget, not look at this again until the end of the week. But it should work if we have a hedge at 149.70. If you want to be very safe, it's there, 149.27. Where does this take us? We take it now to 2 hours. Just check the targets. Resistance 2 is most likely this week 151. We don't get 152. Resistance 1 is where we are right now, so we're definitely going to take it out. But resistance 2 is 151. So maybe we get above. Resistance 3 is 151.80, which is more likely, and that is 152 because we expect the shoulder level at 152. So we will take it towards the end of the week after release of the purchasing manager indexes, and we are looking for 152. It's also 200% projection. I can see the market has supported 161.8. This projection is definitely probably for leg 3. All right, so the market is along. We have market is 150.2. We take a hedge to protect at 149.2. We are going to target 152. We are going to hold a position across the purchasing manager index because we expect good numbers and improvement, of course. And therefore a stronger dollar against the yen, even a stronger sterling against the yen. All right, this brings us to end of issues and questions. Let's just do a very quick recap of what's been going on today. We see reversal in Bitcoin. It's going to be going to down to 65,000. So if you have any longs, you want to close them. We're going to be reversing into shorts. We see breakout in the sterling yen and in the dollar yen. We've just been doing longs into these. We were looking for a breakout in gold, but it has retracted to 2,719. We have just been detailing a strategy to trade it to the upside and how to protect our entry longs by taking hedges. I believe they were at 2,227, and you should take profits for them at 2,717, which is right about now. And we still hold the longs. We've done a lot of detail on this, so I hope we're able to manage correctly. The longs should be held for further breakout. This is just how to trade the market. We believe there's going to be a bounce in oil, so we would want to take longs into it. US Tech 100 is probably going to correct all the way down to 20,000. We will consider only to take longs after release of the purchasing manager indexes on Thursday. At that level, it's probably going to be a buy. We're seeing confluence between US Tech 100 and Bitcoin. Both are going to the downside. We could do a short term in terms of time, short term, short, sell in one of the two because both are going to be moving in the same direction to the downside. Bitcoin probably to 65,000, 65,500 from current levels. with a stop at $2,000 higher, 69,000, and the Tech 100 with a stop at 20,000, I believe 470. We sell current levels or close to current levels all the way to 20,000. The trade is just 1.5 day duration until release of the purchasing manager indexes. All right, I believe this brings us to an end of issues and questions. It's really been great having everyone with us today. We'll look forward to be all together again tomorrow. I hope we will all be doing good deals this week. With this, I'll leave you all tonight. Take good care of yourselves and good night.